Obviously, there's a ton of information out here on different banks, credit unions, regional banks. In your opinion, what is the best strategy in terms of what institutions to approach if you're a new business versus, let's say, if you're an established business? Do you go to the big banks first? Do you go to the credit unions first? What's your take on that?
My take is, I know everybody say, hey, if you're a new business, go to the credit unions, you go here because the level of the level of entry is a lot lower. But I tell you to go to the national banks first because the credit unions are a lot easier to get the money from. So if you go to the Chase, you go to the BOAs, you go to these tier one banks, right? And then you get funding from them. Whenever you tap over to the credit unions, the bag is going to be a lot easier to obtain because they don't have as much requirements. Also, another reason why I say build with these national banks is, build with these credit unions and regional banks on the back end is because you got to watch the deposit outflow. If you look at the regional sector, if you look at these credit unions, let's just be honest, they're in a lot of trouble right now. And majority of the money, I always tell people, follow the money. The deposits are leaving from these regionals and these regional banks and credit unions. They're going to the national banks because nobody knows what's going on in the banking sector. You got the fractional reserve, the deposit window. You got the bank term funding program that ended. All of these things that play a major role in how expensive capital is and then the availability of capital. So I'm going to tell you to go where the money is going, which is the national banks. And then you can always go back to the credit unions because they have always been a lot easier to lend to you versus the national bank. So that would be my take on it. And like I say, just follow that deposit inflow and deposit outflow. See where the money is going. Look at the asset growth. If you look at the regional sector of these banks, right, you got to understand that the commercial real estate is what 70% of commercial real estate is lended on behalf of the regional banks. Now that the commercial real estate sector is in a lot of trouble, and it's not just office buildings, it's not just, it's hotels, it's storage unit buildings. And now that, well, since COVID, a lot of these institutions lended out that money, and these employees are not in these offices. They don't actually need this building. So what's going to happen is they're going to default on it. Now this is on their balance sheet. Now they have non-performing loans, and then this dictates the amount of capital that they have access to. So just be mindful. Like I say, start with those national banks and then tap into the credit union secondly. That would be my strategy.
My journey was a little bit different because I started out kind of in a deficit. So as you're probably aware, a lot of the national banks, let's just say for like American Express or Chase or, even Bank of America, some of those I've found, if you have derogatory items, are going to be harder to kind of get your foot in the door. So like, I guess it also depends on like what your credit profile kind of looks like. If you're of a, let's say, prime or maybe even new to credit, definitely start with the big banks. And what I've also found was that the quality of the institutions that you also have on your credit report matter as well. I talk about this all the time, like the difference between having a bank issued account versus a consumer finance account, right? It's known that certain institutions or certain products are going to have a much higher a rigorous underwriting. So, if you have American Express on your account, more than likely you're at either fair to prime credit type of profile versus, you have My Jewelers Club or something like that.